The US dollar is back in the investment spotlight. The US dollar index rose to its highest level since mid-March as investors turned to the safe haven asset. Notably, the US currency is one of the most popular safe haven assets among investors. So, why are investors so worried? First of all, soaring oil prices have intensified fears of a stubborn inflation. Secondly, investors digested the news about the crippling economic activity in China. And this week, markets have 2 more trading days that can only add to the anxiety and panic. In our video review, we will find out what events will shape traders' sentiment this week. You are watching the Traders Calendar. The US dollar is rising against its counterparts. Against the Australian dollar, the US currency gained the most amid the Reserve Bank of Australia's decision to leave interest rates unchanged. Investors seem to care about the central bank's monetary policy, ignoring the signs of economic growth. Meanwhile, Australia's GDP growth accelerated in the second quarter, thanks to an increase in exports and active government investment. On Thursday, the markets will assess the July trade balance. The data on trade with China, Australia's main trading partner, will be crucial for investors. A bit later, China will report on the country's trade balance for August, and this data will have a significant impact on traders' sentiment. The surplus is expected to be quite large, but is unlikely to exceed last month's figure. The rate of decline in both export and import shipments should slow down, but still remain in the negative territory. Against this backdrop, investors are likely to appreciate the safe haven US dollar. Meanwhile, the economic situation in the United States is also mixed. The country's economy is far from stable, although it's performing better than in other developed countries. On Thursday, the next weekly report on unemployment claims is expected to post 235,000, and this number was considered normal before the pandemic. However, in the current environment of uncertainty, investors may react to this news with a panic. The labor market will be perceived as tight, and the Fed is likely to keep the interest rate unchanged. Markets are bracing for a downward correction in the US dollar quotes. At the same time, investors continue to focus on the Canadian dollar. The Bank of Canada is also hesitant to raise interest rates. It left monetary policy unchanged at the end of today's meeting. This move was forced by the fresh macroeconomic data, which showed a slowdown in the Canadian economy. The outlook is also very vague. The data on the business activity indexes are still below the 50-point threshold that separates expansion from a contraction. Moreover, economists see no signs of inflation slowing down. On Friday, data on the labor market will be released. According to forecast, the number of employees is expected to resume growth. Employment incomes and consumption are growing along with the prices. Therefore, the rise in employment can be interpreted as a sign of accelerating inflation, which means that the Bank of Canada is likely to raise the interest rate. Against this backdrop, one may buy the Canadian currency. However, the market has been rather unpredictable lately. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon!